Hello everyone, welcome to the channel. Last week was a very boring week. If you see, this was a candle which was printed in last week. This is Nifty's weekly chart. So there was not much of a movement which was observed in Nifty. Even if you go to daily chart, you can very clearly see the candles which are being printed from Monday all the way till here. If you see the high of this Monday, it was 24,620. Okay, the low that was being printed was 24,260, 270. So from 600 it moved till 300, not more than that. From Monday till Friday it was moving only in a 300 point range, which is pretty bad. And if you see, this is actually bad when it comes to downward movement, and it is actually good when it comes to upward movement. Why I am saying like that, you need to understand. We always know that the market moves in these kind of a fashion, right? There will be an impulse move and there will be a retracement move, and every time when market forms higher highs, we can assume that the market is going to go in an uptrend, and we will look for a particular demand from this particular place, from where somewhere in this place we will look for a demand, and then when market retraces back to this demand, we will look for long options, right? And the important thing to note is this impulsive moves will be faster, whereas this retracement moves will be very slow. Okay, so that is what is happening in market right now. Market made a very good impulsive move which broke the structure, right? So the move which is happening right now is kind of a retracement move, which is kind of looking for a next possible demand from where market can give a next pretty good upside move. Okay, so if you see back to weekly chart, let it refresh just a second. Yeah, so if you see back to weekly chart, we can see that the market is in a downtrend in weekly chart. Okay, and this whole range is like a more like an accumulation slash consolidation kind of a range, and this range is where many retail traders like you and me will tend to lose more money in the market if we are trading without a proper plan. Okay, the important thing again to be noted is there is no proper break of structure, and this is a swing point high, this is a swing point low. Ever since this swing point high to low has been moved, market did not make any significant movements after that. Okay, that needs to be observed. And the from a daily chart perspective, market is slightly bullish. Okay, although in weekly it is bearish, in daily we can see that it has given a clear break of structure, and market is slightly decreasing down. Till how far we can decrease is something which we can plot from our Fibonacci tool also. So from Fibonacci tool we can see that the market, if I zoom this out and zoom in this and show you very clearly, 0.768 and 0.618, these two ranges, right, these will act as your golden zone. This is what they say in Fibonacci as a golden zone. Reason why they are called as golden zone is, and when the market retraces back to a golden zone, we can see a very strong reaction. Either if the market is earlier in an uptrend, if the market comes back to the golden zone, then market can give another impulsive move to the upward direction. This is why we say this as a golden zone. You can see this happening time and time again. If you go back here, and if I mark the Fibonacci tool from this high to this low, I can see that 0.618 here, right? This was a golden zone. When the market came back here, see this uptrend, this beautiful uptrend happened, right? This is what we need to understand from Fibonacci. This is why I use Fibonacci tool also. So if I redraw this Fibonacci tool and mark it from this high to this low, where is the golden zone sitting? It is sitting somewhere in some 0.618 to 0.768 is this zone, right? This small blue color area, small greenish blue color area which you see, right? This is what is being marked as golden zone according to Fibonacci 2, right? This we will just plot it now and keep it. Now, what we can align this, how we can align this to our trading is, we see that there is a gap here, right? This gap is likely to be filled on the downward direction before market can make a drive to the upward direction. So if market can come down to this point and give a small positive reaction, we can expect the market to go up. So where we are right now, we are at 24,366. so where is this golden zone? It is sitting somewhere close to 24,050 range. So what we can expect is, if market has to resume in the upward direction, there is a likely possibility that market can come down till here and then go up, right? So how we can plan our trades? So we'll go to 4 hours time, and before we go to 4 hours time, we can also note that there is a small imbalance which you see in red color fashion, right? This is a small indicator which I use for marking the imbalances. Okay, so I'll just mark this in reddish color so that this will act as your supply zone. So if market comes back to this place, we can expect market to flow down till here and then make an impulsive move to the upward direction. So what I mean is, if market can go up till here and give a small kind of a negative reaction in 1 minute or 5 minutes time frame, then we can expect the market to come down till here, and then after this place we can expect the market, if it gives a positive reaction from this place, right, like this, then we can expect the market to go up and make a new higher high. So there are two trades which are being lined up. One is this like a push up, give a negative reaction and then push down. Second is, if market continues to push down, let it push down, and then if it gives a positive reaction, we can expect the market to go up and make a new higher high, or at least revisit this particular 24,500 range. So how can we convert this to our trade plan? We just need to wait. We need to wait for market to either come to this place, give a negative reaction and then drive down, or wait for the market to come till here, give a positive reaction and then drive up. If you are trading in between this range, you will be confused. I will tell this very, very clearly. Trading is a very, very boring process, boring process. You can think like, okay, I'll put 10,000, I'll put 20,000, I will see, I'll buy one lot of call, one lot of put, whatever happens, well and good. If I get some profit, I will just close my screen and go away. That is okay. How long can this happen? Understand? This can happen to be profitable for you in 1 day, 2 days, 3 days, fine. But 10th day, your account will be gone. After that, what will you do? You need to understand that in a long term, that market is going to be there even after 10 years. But if you don't have a capital, then you will be not there trading, and you will think like, okay, if I had money today, I could have made this much money. I could have waited for the market to come here and then I could have made the move. All that thought process will come for you only when you are saving your capital, or when you are trading along with a proper risk management. So from 4 hours, we can clearly see that there are two imbalances which are left out in this leg of price action. The topward range is clearly efficient, meaning there is no inefficiencies except this one which we have marked it. Okay, so ideal to ideal scenario is, for me, if market opens flat or small to small gap up, and if it taps into this place, I wanted to see if market gives a negative reaction by sweeping this high and forming a reversal like this, then I'm more interested to take the market down. This is going to be my A plus trade setup. Reason why I'm more interested in this is, we know that this area is this golden zone which I am going to target. We know that market has to come back to that zone. We know that there is a supply here. All this will line up as a perfect trade opportunity if it sets up for us to take a profitable trade. So do not hurry into any kind of a trade on Monday. Let market settle down, give time to the market, let it take time. Okay, there is no need to absolutely get into the market at 9:15 itself, entering into a call. At 10:30 you make a loss, and 10:45 you start adding funds and start to recover. Don't do all that process. Wait and form a clear strategy, clear to clear process. Okay, so wait for the market to come up all the place till 24,530. Even if this is like a 200 points upward movement, it is fine. If it is goes in a one stretch in 15 minutes, 5 minutes time frame, like one big candle is being formed, and if market continues to push upward, let it push. We will reframe the trading plan on Monday end of the day and plan our trades accordingly for Tuesday. What I mean to say is, if market does not give this kind of a negative reaction, and if market opens flat and continues pushing upward like this, let it push. We can even anticipate reversals from this swing point high, and then we can plan to take the market down. This is also another possibility, because this can also act as a liquidity sweep. Ever since this cash system is being introduced, see, cash was introduced somewhere in August 20th range or 25th range, right? Before that, market was going in a steady fashion, but ever since this cash system was introduced, you see this big green candles in your chart, right? These are all because of this cash system, and cash system literally kind of made this market untradable in this last week. If it is being untradeable, what you should do is, you should not trade. You should look for opportunities in some other market, either be it forex or be it in gold, or wherever the opportunity comes up, you need to trade there. You should not firefight with Nifty just because you wanted to trade in Indian market. That is not how it should be. Okay, so I'm just going to quickly summarize. If market opens flat and goes up, or if it opens slightly gap up, well and good. If it gives a negative reaction, please plan for a put option all the way till here. Even if you can target 100 points or 150 points in this move, well and good. Trail it. Do not carry forward any positions. I'm saying this again and again. Monday can be little volatile because of Tuesday's expiry. They will try to make sure that market can also be in a range, so that on Tuesday there can be an explosive move on one direction. So keep your quantity size as low as possible. Even if this kind of a negative reaction is being obtained, please make sure that you're trading in one or two lots and not more than that in this kind of a move. Okay, hope this video is informative and educative. Thank you so much for watching. We'll meet in the next education video.